The silver market has been behaving more like the base metals like copper rather than following in the footsteps of gold. Normally, silver tends to benefit in an environment where we see strong industrial demand, but also strong demand on a macro basis in terms of safe haven buying. On the one hand, we're seeing tremendous demand for silver when it comes to retail interest. Coin demand has been tremendously strong, not just in the US, but around the globe. But on the other hand, we're seeing the concerns around a recession risk really weighing on the industrially biased precious metals. And silver is one of the metals that tends to come under pressure. In fact, during recessionary periods, we tend to see silver falling by around about 18% on an annualized basis. So it is being pulled in both directions the way gold is, but there's more downside risk for silver, we think, over the next couple of years than perhaps there is for gold. Beyond that, we think the longer-term picture starts to look much more favorable for the silver market on the back of PV demand and an industrial demand rebound.
Suki, platinum and palladium were the darlings of the market back in 2020 at the peak of the pandemic, but they've lost their sheen. What's the sense here? Because again, for palladium, there's the industrial use angle, which is directed to the auto industry. So how do you map the trend here?
So both of the platinum group metals, both platinum and palladium, have come under pressure. And we think that the bulk of those concerns around recession have actually already been priced in. We think the fundamentals start to look much more favorable for both platinum and palladium towards the end of this year. We think there's two key factors that we really need to be keeping an eye on. Firstly, the recovery in the auto market. We were expecting auto production demand to rebound earlier in the year, but the supply chain challenges that have been exacerbated by Russia's invasion of Ukraine have meant that the recovery in the auto market has been much slower. But we expect that to materialize as the year unfolds. And then secondly, on the supply side, we've seen some production cut revisions, some production guidance revisions from South Africa and from America as well, which means that both platinum and palladium markets are looking tighter into the end of the year. So yes, during a recession, platinum and palladium tend to come under more pressure. They tend to fall by, say, 30 to 50% on an annualized basis. But we're actually seeing some fundamentals that are developing more positively, which should see both PGMs moving higher into the end of this year and into 2023 as well.